We're just 2 days away from the start of tax season, and the IRS expects more than 150 million tax returns this year. Now, while you do have until April 18th to file, now is the time to start gathering important documents like your W-2 forms and your receipts. Tax expert Jeffrey Levine is here to help us all get ready. And I have to confess, every year I say I'm going to get this done so early this year, and almost every year I end up asking for an extension.
Just like everybody else.
What is the best time to file?
As soon as possible, and there are a couple of reasons for that. First off, about 70% of taxpayers this year are expected to get a refund. So don't you want that money back as soon as you can? And the other reason why you want to file early is that we live in an ever-changing world. And one of the realities today is that if someone has your Social Security number, one of the top scams out there is they will actually file a tax return for you. But they're not nice criminals. They don't file a tax return so they can pay your taxes.
Of course not.
They file a return so they can claim a big refund. It goes to them, and you only find out typically when you file your real tax return. Not only does it slow up your refund, but you could actually get a bill from the IRS.
Says we already paid you.
Right, saying you owe us back this money. You took too big of a refund.
Ah, well, so hopefully you want to beat them.
Yeah, beat them to the punch, exactly.
That is going to happen.
So you got to make sure you have all your documents, but as soon as you do, go for it.
And most people file electronically. Is that the best way?
It is the best way. It's what I call my 3 S's. It's safer, it's more secure, and it helps you get a speedier refund. So there's no reason not to file electronically these days. It's the best way, no doubt.
Even if you have a lot of paper receipts, a lot of paperwork that you're dealing with?
Sure. Not all of that has to be submitted. You just need that for backup in case the IRS comes to you and examines your return, and that's really unlikely. Today, the IRS actually audits very few returns. Nobody wants to go through that, but if you've got good records and good receipts and you keep everything, there's nothing to worry about. You're just telling the truth.
And now, when you say keep receipts, it sounds overwhelming that every time you're going to go to a store, you're always going to save those little pieces of paper. What receipts should people be saving, and does that even apply to everyone?
It does apply to everyone because pretty much everyone has deductions. If you go to a doctor and you pay a medical bill, that's a receipt that you should keep because that could be a deduction for you. If you give a donation to a charity, even those $1, when they ask you go to a restaurant, would you like to add $1 for some charity? Well, keep that. It's $1. It all adds up at the end of the year. If you give 2 of those every week, that's $100 at the end of the year. You might be able to deduct on your tax return. And people who don't keep good records underestimate typically because they don't want to get in trouble.
So there's no shortcut kind of cheater's way that you can save those records without having to keep these?
I say, listen, if you're not sure, take a big folder, one with sides or a basket or something, and throw everything in there. I'd rather go through that and weed out the things that they don't need than be looking for something in the heat of tax season and not have it.
You don't have a record.
Exactly.
And what are some common mistakes that people make when they're filing?
Well,
common deductions.
Sure. There's a number of common deductions and mistakes people make. So one of the things you could see on the screen, forgetting to sign your return, math input errors or input errors. You know, today a lot of people file electronically, so that removes a lot of the math errors we saw in years past. But it's one of those things, garbage in, garbage out. And
you have to put in the right numbers.
Right, you got to double check and make sure that's right. Make sure filing status is correct. Incorrect Social Security numbers, one of the big ones that people make mistakes on. And of course, today, because everything is electronically, we look at forms like 1099s that not only you get a copy of, but the IRS gets a copy of those. So if you're not including all of those 1099 forms, let's say you have 3 or 4 different bank accounts, and you don't include one, you're probably going to get a nice letter from the IRS in a few months or a few years saying, hey, you owe us some money and perhaps some interest and even penalties. So make sure you're including those.
It's hard sometimes to know what you can and can't write off. So what are some common things that people miss?
Well, there are a lot of them, unfortunately. So again, failing to include carryover losses from last year. When we start with this year's return, the first thing we do is look back at last year, see what you had. Did you have any carryover losses from last year? Number 2 on the screen here, I'd point your viewers to, is one that's not really a deduction, but it's something that people miss. And overpaying overstating your income is the same thing as not taking a deduction. A lot of people have mutual funds or some other stock where every time they get a dividend, it buys a little bit more. But they don't include that in their cost basis. So then when they go to sell that security, they actually have a basis that's artificially low. It should be much higher.
They're forgetting to write that
Exactly. And the difference there is what you pay tax on. So you want to be adding that each year to get that cost basis higher so you pay as little tax as possible.
All right. Well, Jeffrey, thanks so much for being here. We really appreciate it. It's a lot of information, but we have more on our website, so you can always go back there and double check. It's at cbsnewyork.com. You can find all of Jeffrey's tax tips. Andrea, over to you.